Welcome to the Deep Dive, your express lane to understanding complex financial stories. Today, we're plunging into the world of industrial giants, taking apart the latest financials from Nuvoco Vistas Corporation Ltd. They're a really leading player in India's dynamic building materials sector. Our mission today, to basically distill the Q1 FY26 results for Nuvoco Vistas. That's the quarter ending June 30, 2025. We've got the financial reports, press releases, investor decks, the works. We want to give you the key insights, your shortcut to being clued in on a company making some big moves. And what really jumped out at me right away, Nuvoco Vistas just announced its highest ever first quarter consolidated EBITDA. That's quite a headline.
It really is. And for anyone maybe not following them super closely, Nuvoco Vistas is a major force. Their core business, cement, ready-mix, concrete, and also modern building materials. So yeah, when results like these come out, it matters. It tells us a lot about the health of India's whole infrastructure and construction scene.
Yeah. All right, let's unpack this then. We heard about that record EBITDA. What were the other sort of standout numbers from Nuvoco's Q1 performance? What really tells the story here?
Well, consolidated revenue from operations.
Yeah.
That came in at 2,872.70 crore. That's a pretty strong 9% year-on-year growth compared to last year.
Okay, 9% top line.
Exactly. And yes, that consolidated EBITDA hitting a record 533 crore. That's a huge 53% jump year-on-year. Really impressive stuff.
Wow, 53%. That's a massive increase. But what about the bottom line? How did that translate into actual net profit?
Yeah, good question. The net profit after tax, well, it leaped dramatically. It climbed to 133.16 crore. Compare that to just 2.84 crore in Q1 last year.
Just 2.84 crore, so a huge turnaround.
Absolutely. And this isn't just a number, right? It signals a real shift in operational efficiency, maybe pricing power too. It kind of suggests Nuvoco's strategies are working, turning those higher sales into much better profitability. That's key in this business.
And the earnings per share followed.
It did.
Yeah.
EPS up to 3.73 from just 0.08 last year. Big difference.
So definitely robust numbers all around. What's actually driving this? Is it just, favorable market conditions, or are there specific things Nuvoco did operationally?
Well, what's fascinating is how directly you can tie these numbers back to strategic operational calls they made. For instance, strong cement volume. They hit 5.1 million metric tons, MMT, in Q1.
Which is up YoY.
Yeah, up 6% year-on-year, and actually a new record for their first quarter.
Yeah.
But importantly, it's not just about volume. It's about selling smarter. They've got this strategic focus on premiumization, the share of their premium products in the trade volume. It actually went up to 41% this quarter, from 40% last year.
Okay, so slightly more premium sales.
And maybe even more significantly, they achieved a really robust trade mix, 76%. They highlighted that as the highest in the last 13 quarters,
Yeah.
up from 73% last year.
Right, trade mix. Remind us why that's so crucial.
It essentially means they're pushing more product through higher margin channels. Think direct sales to big projects, specific retail segments, not just relying on bulk, lower margin stuff. That directly hits their profit per ton. Super important in a commodity game like cement.
Ah, okay, that makes perfect sense. So those moves, premiumization, that strong trade mix, they really translate to profitability. I saw their consolidated operating margin was, 18.35%?
Yeah, 18.35% and net profit margin at 4.71%. Both healthy signs of efficiency.
Now let's pivot a bit, because there was a move this quarter that could really fundamentally change their scale. I mean, this Vadraj cement acquisition. Tell us about that.
Right, this is a big one. It's not just buying assets, it feels like a strategic power play. Nuvoco Vistas was declared the successful resolution applicant for Vadraj Cement, VCL, under the IBC, the Insolvency and Bankruptcy Code.
Okay, so picking up a stressed asset.
Exactly. The plan got the nod from the NCLT, the National Company Law Tribunal, their Mumbai bench, back on April 1st, 2025. And they moved fast. The acquisition was done by June 21st. Nuvoco reconstituted the VCL board, took control.
And the costs?
Total consideration was 1,800 crore. They funded it with 600 crore in long-term debt, and the rest through short-term bridge financing.
Bridge financing.
Yeah, it shows a kind of managed approach, balancing the immediate need with longer-term capital structure. And their subsidiary, Vanya Corporation, was merged into VCL just after, on June 27th. Worth noting, though, the final accounting for the purchase price allocation is still provisional.
Okay, so connecting this to the bigger picture.
Yeah.
How does this acquisition really shift Nuvoco's capacity and market standing in India?
It's significant. Nuvoco's current capacity is around 25 MMTPA million metric tons per annum. With Vadraj fully integrated, they're looking at hitting approximately 31 MMTPA by Q3 of FY27.
So a big jump puts them firmly in the top tier.
Absolutely. It solidifies their position as India's fifth largest cement group by capacity for the long haul. And strategically, it's a perfect fit. It aligns exactly with their goal of expanding into the west and north of India, complements their existing strength in the east really well. It lets them tap into different regional growth stories.
Right, diversification geographically.
Exactly. And they have a detailed plan to get the Vadraj plants, the ones in Kutch and Surat, operational by that Q3 FY27 target. It covers everything.
Yeah.
Getting people in place, checking equipment, ordering the big long lead items.
So civil construction starting soon.
Yeah, Q2 FY26 for civil works, then commissioning trials in the first half of FY27 leading up to commercial production. It seems well mapped out.
Okay, so they're growing aggressively, which often means, well, taking on debt. How are they balancing that, managing financial stability, especially their debt, with this big acquisition?
That's always the question, isn't it?
Yeah.
But Nuvoco seems pretty committed to their deleveraging agenda. Even with this deal, they actually managed to reduce their like-to-like net debt
Really? How much?
by 884 crore year on year. Brought the total net debt down to 3,474 crore. Their consolidated debt-to-equity ratio for Q1 was 0.59 times. Pretty healthy.
And total debt to assets.
That stood at 26.81% for the consolidated entity, so manageable levels.
So even with that bridge financing for Vadraj, they seem comfortable. Does that short-term financing pose any particular risks, maybe around interest costs if rates shift, or are they likely to refinance it quickly?
Well, that's a fair point. Bridge financing is great for speed, but yeah, managing its conversion or repayment is key. You don't want higher interest costs lingering, especially if rates move against you. But given their track record on deleveraging and their strong cash flow, you'd expect them to handle it. Still, the market will definitely be watching how they transition that financing over the next few quarters.
Right. Okay, so cement is clearly king for Nuvoco. But this raises an important point. What about their other businesses? How are segments like ready-mix concrete and modern building materials contributing? Is it just cement driving everything?
No, not entirely. They do have a decent diversified portfolio. The ready-mix concrete, or RMX, business operates 58 plants across India. Their Concreto range seems to be getting good traction, and they've supplied some really high-profile projects. We're talking things like the Mumbai-Ahmedabad bullet train.
Oh, wow.
Yeah, the Birsa Munda Hockey Stadium in Rourkela, the Aquatic Gallery in Ahmedabad, plus metro projects in Delhi, Jaipur, Noida, Mumbai. Big stuff. Shows their capability.
And the modern building materials, MBM.
Right, MBM. That's under their Zero M brands. That segment showed strong year-on-year sales growth, too, across things like tile adhesives, construction chemicals, block jointing mortar.
So value-added products.
Exactly. These segments are definitely being nurtured for growth, provides important diversification beyond just cement. And they have their R&D center, too, the CDIC in Mumbai, which helps them innovate and find new product niches.
Okay, let's zoom out a bit then. What's the bigger picture, the macroeconomic environment Nuvoco's playing in, and how are they dealing with cost pressures in this market?
Well, the macro backdrop actually looks pretty favorable for them. Generally speaking, we're seeing CPI inflation trending down. Manufacturing PMI is strong, a 14-month high, actually.
Positive signals?
Yeah, GST revenues are up. Rural consumer confidence seems to be picking up. And the repo rate has been heading downwards, all generally good signs. Plus, the monsoon was okay last year, and the forecast for this year, FY26, is above normal. That's always important for rural demand.
And the big one, government spending.
Huge tailwind. The government's infrastructure push is massive. Central government capex projected at 11.21 lakh crore. That's about, what, $135 billion USD, up 10% year on year for FY26.
That's enormous.
And the top 21 states are expected to boost their capex by 17% too, to nearly 10 lakh crore.
Any specific areas getting focus?
Definitely housing. A 64% jump in allocation to PMY, that's the government's main housing scheme, and eastern states planning around 38,000 crore for their own housing schemes. Plus, you've got state elections coming up in places like Bihar and West Bengal, which often means a bit more spending and activity beforehand. So, yeah, the demand environment looks supportive.
Okay, strong demand drivers. What about the actual cement market conditions, pricing, and how's Nuvoco managing its own costs in all this?
Cement demand itself saw, let's say, moderate growth in Q1. It was probably affected a bit by the early monsoon, maybe some geopolitical uncertainty, and that intense heat wave we had.
Right.
But pricing held up reasonably well.
Yeah.
And India prices actually improved quarter on quarter. Most of the hikes they pushed through late last year seem to have stuck. And if demand stays strong, that should support prices going forward.
And on the cost side, fuel, raw materials.
They seem to be managing well there. Their blended fuel cost was actually flat quarter on quarter, even though pet coke prices spiked briefly. That points to good fuel mix optimization and smart sourcing. Their fuel costs are apparently among the lowest in the industry.
That's a key advantage.
It is. And raw material costs actually came down a bit quarter on quarter. They seem well placed for slag supply too, thanks to long-term contracts. And their overall cost savings program is apparently on track, targeting savings of about €50 per ton for this fiscal year.
Okay, so strong financials, strategic growth, decent cost control. But beyond the numbers, Nuvoco also talks a lot about sustainability and community work. What do the reports tell us about their long-term vision there?
Yeah, and that's important for the broader picture, right? It shows they're thinking beyond just the next quarter. On the environment side, they continue to lead. They actually reduced their specific CO2 emissions again.
Lower than before.
Yeah, down to 454 kilograms CO2 per ton of cementitious material. That was 457 last year. And that number is significantly lower than both the India average and the global average. It's quite impressive.
How are they achieving that?
Well, a big part is their focus on the circular economy. They used over 80,000 tons of waste as alternative fuel just in Q1. They also cut their water intensity by 11% year on year, planted over 19,000 saplings. And a key technical metric is their cement-to-clinker ratio. It was 1.74x in Q1.
And a higher ratio is better, right? It means less clinker.
Exactly. Clinker is the really energy-intensive part of cement making. So a higher ratio means they're using more alternative materials like fly ash or slag. That cuts costs, but more importantly, it significantly cuts their carbon footprint, puts them ahead of many competitors.
Right, a double win. What about their social initiatives, the CSR work?
They structure their CSR around 5 pillars. Things like natural resource management, education, health, skill development, and infrastructure, Sanghit Prat, Shikshit Prat, and so on. And they give concrete examples, like 10,500 hours of training for masons, digital classrooms in 44 schools reaching almost 9,500 kids, health camps, village infrastructure projects,
Yeah.
benefiting thousands of people.
So, tangible impact.
Seems like it. And they're getting recognized for it too. Awards for digital innovation, logistics tech, their SIRGEN program, and multiple awards for sustainability and conservation work.
Okay, now for maybe a slightly less rosy part. Let's do a deeper dive into some of the complex, ongoing legal and contingent matters mentioned in the reports. These could have future implications. First, that Competition Commission of India penalty. Can you give us the background and status?
Sure. This goes back to August 2016. The CCI, India's competition watchdog, slapped a penalty of 490 crore on Nuvoco and other cement firms too, alleging violation of competition law. Price fixing, basically.
Right, that was a big case.
It was. An appeal is still pending before the Supreme Court. The court had previously ordered them to pre-deposit 10% of the penalty amount as an interim measure.
Now, crucially, I remember reading Nuvoco is indemnified by the former promoter group for the CCI stuff. But there's a catch, isn't there? The promoters dispute liability beyond that 490 crore cap.
That's the wrinkle, yes. The erstwhile promoters say their indemnity is capped at the penalty amount itself. Nuvoco, however, based on legal advice and their view of the indemnity agreement, hasn't made any provision for this penalty or any potential interest.
So they're confident either the indemnity holds or they win the appeal.
That seems to be their position, yes.
Yeah.
It's a significant contingent liability hanging out there, but they haven't booked it.
Okay. And beyond the CCI, there are these ongoing disputes in West Bengal over industrial promotional assistance. 2 plants involved.
Correct. The Mahia cement plant and the Panagar cement plant, which belongs to their subsidiary, NUS Limited. They have significant outstanding claims for these incentives, totaling over 720 crore gross combined as of June 30th.
But they stopped accruing them.
Yes, due to ongoing litigation with the West Bengal government in a high court of Calcutta, and also citing long delays and inaction from the state authorities, they conservatively stopped recognizing these incentives as income some time ago. April 2019 for Mijia, April 2023 for Panagar.
Have they made provisions for potential losses?
They have. They're carrying provisions for expected credit losses, 238 crore for Mijia and 167 crore for Panagar. So over 400 crore in provisions. But importantly, they still state they're confident of ultimately recovering the full amounts.
And then there's this new revocation act from the West Bengal government.
Yes, adding another layer of complexity. In April 2025, the state government passed an act that basically tries to retrospectively cancel all these incentive schemes going back decades, from 1993 to 2021.
Wow, retrospectively, can they do that?
Well, Nuvoco and NU Vista don't think so. They've both filed writ petitions in the High Court in June 2025, challenging the constitutional validity of this Revocation Act. Their legal advice says it's ultra-vires, beyond the state's legal powers, and unconstitutional.
So more legal battles ahead. It really does highlight the complex regulatory and legal hurdles companies face, doesn't it? Even when operations are strong.
Absolutely. These contingent liabilities and legal fights are a crucial part of the full picture. You have to understand these risks alongside the operational performance. It's a reminder that business doesn't happen in a vacuum.
So as we wrap up our deep dive into Nuvoco Vistas Q1 FY26, what's the main takeaway for you? What's the headline summary?
I think the headline is definitely that strong Q1 performance. Record profitability, good volume growth, clearly fueled by that focus on premium products and getting the trade mix right, and then, of course, the Voyage acquisition. That's a real game changer. It significantly boosts their capacity, expands their reach into the West and north. Very strategic. Plus, you have to note their continued discipline on deleveraging, managing costs, and those impressive strides they're making in sustainability. It paints a picture of a company firing on multiple cylinders.
Yeah, and the managing director, Mr. Jai Kumar Krishnaswamy, echoed that. He pointed to the healthy volumes, better pricing or realizations, as they call it, leading to that record EBITDA. And he really emphasized their focus on sustained growth, market expansion, especially getting those Vadraj plants up and running. Okay, so here's a final thought to leave you with. Nuvoco Vistas is now set to be India's fifth largest cement group. They're expanding strategically, they're leaders in sustainability. So, looking ahead, what innovative approaches might we see them adopt next? How else could they differentiate themselves in what's still a very competitive and always evolving building materials market in India?